back channel.
Good day, ladies and gentlemen. Let me take this time to recognize the following persons: Chairman and members of the ECCB Board of Directors, Governor of the Eastern Caribbean Central Bank, Mr. Timothy N.J. Antoine, Deputy Governor of the ECCB, Dr. Valda Henry, Chief Director Policy, ECCB, D. Tracy Polius, Governors and Deputy Governors of representative central banks, former governors of central banks, other central bank officials, Editor-in-Chief, Central Banking Publication, Mr. Christopher Jeffrey. It is an honor to welcome you to the 5th Annual Conference with Licensed Financial Institutions, the first in-person meeting since the COVID-19 pandemic. My name is Janelle Wilson, Senior Examiner in the Financial Sector Supervision Department here at the ECCB. I will be your chairperson to guide today's session. I will now welcome our Governor, Mr. Antoine, to make his opening remarks. Please welcome him.
Thank you very much, Master Ceremonies Janelle. Licensed financial institutions, chairs, CEOs, senior reps, regulators in the room. Any other special guests? I see the CEO of the CCU, Caribbean Confederation of Caribbean Credit Unions. Caribbean Confederation of Credit Unions, CCU. Denise, welcome to you. I see Philomena Lee, who is the CEO of the Eastern Caribbean Automated Clearinghouse System. And I'm just looking for, and of course I see our country managers. Several of them are here. See Everton, St. Lucia, Shelma, Dominica, Cozelle, St. Vincent. Just wave, some of you are here for them. We appreciate our country managers being here. But LFI CEOs, chairs, it's so good to see you guys. And I'm collectively hugging all of you. Some of you have done that, others I haven't. We missed you guys, we really did. It's not the same. Virtual is great, but it's not the best. And after 3 years or whatever it is, we are so pleased to have you back on our campus, having a good time. I know some of you had a good time last night. We had a nice little dance party after, and it was great. I am happy to see those who were able to join us. Flights delayed, I think Donna was, there's Donna. Got in a little later because of flights, but here you are. Thank you, Donna, for making it. So we're really, really happy to see all of you. The room is a little bigger because, we'll come back in, so normally we're a little closer and a little, more cozy atmosphere. But that notwithstanding, I think we'll have a great time. So that's all I want to say to you. Welcome. I hope, before I conclude, I hope this CBDC discussion, whatever your views are on CBDC, I hope the CBDC discussion this morning would have given you a little more color about why central banks are pursuing CBDCs. Why your central bank, the ECCB, did it. Not for bragging rights, not to make headlines, not for awards. We've gotten all of those. We've made headlines, we don't brag. We made headlines, we got no awards. But the truth is, we did it because we saw the future, and we are trying to position the currency union where that is concerned. When we started this journey 3-4 years ago, it was pioneering and sort of on the periphery. Now, as you saw this morning, it is mainstream. And there are different motivations. For some, it's geopolitics, let's be honest. The China-US story, US-China story. For others, it's more simpler things for us, like payment efficiency and so on. Maybe correspondent bank, and Michael hinted at that. Yes, there is a possibility down the road that we could have less reliance on correspondent bank in relation to the extent that CBDCs develop. But the only way that works is if you have the multi-CDB platforms. In other words, other countries have to have a CBDC to which you can connect and which can be interoperable. So that is part of our challenge now. Can we make them interoperable? Within the region, beyond the ECCU, there are countries speaking to us about having that kind of arrangement. And not today, maybe tomorrow and another time, I'll tell you about things we want to do where we're not settling so much in US dollars, but we're using our individual currencies. Because the reality is that we're still settling in US dollars for a lot of what we do. I mean, it's one thing to need US dollars to buy from the US. But why on earth should somebody in Antigua doing business in Dominica or Barbados have to find US dollars to do that? Especially where the currencies are stable, like we have been for the last several days. And why on earth should somebody from the ECCU go to Barbados and be asked to pay in US dollars when they could pay in EC dollars? I mean, again, you see, that's when I said I would be brief. I'm having a discussion with my colleague, Central Bank Governor in Barbados last week in Jamaica. I say, Kevin, I mean, we get on well. I mean, listen, I can't have Are we live streamed? All right. Well, I think the Holy Spirit prompted me on that. So my colleague, Governor Greninger, and I are having the conversation, and I think he is committed, as I am, to working to remove these frictions. There has to be, especially where we have successful exchange rate regimes. The reward of a stable exchange rate, such as we've had since 1976, should be that we could trade in our currencies, not have to rely on the US. And yes, we have the US dollars to do it if we need it, but that's not the point. Think about what it means for somebody who has to buy US dollars. Yes, that is available, it's great, but they have to buy it and they have to go back and forth. That is not necessary. And if we put our minds to it, that can be resolved. All right, I said more than I should have, but I'll leave that there. Donna, we'll have some work to do with you in Barbados. But you span both Barbados and the EC. So that's why I look to you, because you are straddling both jurisdictions. You see everything. That's the kind of thing we want to bring to resolve real people problems at this point in time. That's the efficacy of, that's where we should bring value, add value. We're not doing these things for doing them sake. We're not doing innovation because we want to say we innovate. I have no interest in that, zero interest in that. Solve problems that matter for people. When you look at what our small businesses are paying in fees, especially for the electronic, they cannot see their way. That is a business model that is not viable. Those are the things we have to solve. So you go into these places and they tell you the machine is not working. What they really mean is that the business model where they have to pay 5% does not work for them because they cannot be competitive if they have to then pass that on to the customer, which of course they have to do. That's the issue. I've just given a simple example. What motivates us about this particular issue? We'll have time to talk about that. So, welcome. Have a great day. Have some fun.
Thank you, Governor. We now continue with our program. We have two exciting sessions today as follows. First, we will have a pivotal discussion on financial inclusion and regulation in the ECCU. Next, we will engage in a critical conversation on the Credit Bureau strengthening access to finance, and both sessions will be live streamed on our various social media platforms. There will be a networking break session, and following that, our session, we will have lunch starting at 1:15 p.m. I will now move into the first panel, moderated by Mrs. Shari Joseph. Mrs. Joseph is an examiner in the Policy and Licensing Unit in the Financial Sector Supervision Department here at the ECCB, where she plays an integral role in the integration of climate risk as part of the risk-based supervision. She is also part of the Basel implementation team and the Credit Bureau team. Mrs. Joseph is a dedicated professional with a master's in accounting and finance from the University of Westminster, London, and a bachelor's in economics and accounting from the University of the West Indies. Mrs. Joseph has a wealth of experience spanning 10 years in the finance and policy domains. Prior to joining the ECCB in November 2020, she worked at the Macroeconomic Policy Unit of the Ministry of Finance in Grenada for 7 years, where she served as Senior Policy Analyst and later the Acting Chief Policy Analyst. During her tenure, she participated in the World Bank's Voice Secondment Program and has gained several certificates and training in the IMF. Shari also previously worked at the Grenada Cooperative Bank for 4 years, where she acquired an understanding of the banking system. Mrs. Joseph is highly motivated, dedicated, and analytical, and is seeking a pivotal role as a technocrat to contribute to the region's economic development. Ladies and gentlemen, please help me welcome Mrs. Shari Joseph.
Thank you, Chair, and good morning to everyone. At this time, I would like to invite the panelists to join me on stage. Thank you. So good morning, everyone, and welcome to today's insightful discussion on a topic of paramount importance, financial inclusion and regulation in the ECCU. Today, we gather to delve into the intersection of two critical pillars in our economic landscape. That is the drive towards greater financial inclusion and the imperative need for effective regulation within the ECCU. The ECCU presents a distinct landscape where financial systems intersect with various cultures, economies, and policies. Our conversation today aims to uncover the challenges, opportunities, and strategies crucial to ensuring economic empowerment and access to financial services for all citizens across our islands. Together with our esteemed panelists, we aim to explore the pathways to a more inclusive financial environment in the ECCU. So without further delay, let us embark on this enlightening journey together. We are honored to have three distinguished experts with diverse perspectives and profound insights on this matter to lead us on this journey by sharing their expertise and wisdom. So our first panelist this morning is Mr. Aaron Evans. Aaron Evans is a General Manager of Kingston Cooperative Credit Union in St. Vincent and the Grenadines. He has over a decade of experience in financial services sector in the US and the UK. This is augmented by his experience in other financial accounting and auditing roles throughout the Caribbean, from Guyana in the south to Puerto Rico in the north. He holds a Bachelor's of Science degree in accounting from the University of the West Indies and is a member of the Association of Chartered Certified Accountants. Aaron took up the post of General Manager in July 2023 and is now responsible for steering the credit union through the increasingly challenging regulatory environment. In his previous role as a chief accountant, Aaron has developed relationships with the Eastern Caribbean Central Bank, credit unions, and their leagues in Jamaica and Barbados, and has managed various additional projects. He is the developer of the Introduction to Personal Finance for the Caribbean online course, which brings together professionals from across the Caribbean to teach various personal and small business finance sessions. This course exposes persons to topics such as using technology to manage money and shows persons the necessity of financial institutions and how to leverage financial tools and products to achieve their financial goals. At work, Aaron works assiduously on finding solutions to various issues facing his institution and, by extension, the members. During the weekend, he likes to go boating or preparing grilled delicacies on the beaches of the Grenadines with his friends. We welcome Mr. Evans. Our second panelist this morning is Ms. Donna Wellington. Donna Wellington is the Managing Director of CIBC First Caribbean, Barbados, and the Eastern Caribbean. Donna joined CIBC in 2005 after working 15 years in the financial services industry. In June 2013, she was appointed to her current role as Managing Director. In this position, Donna has responsibility for revenue generation and regulatory affairs across all key segments of the banking operations of the Barbados Operating Company in 4 countries: Barbados, Antigua, St. Kitts, and St. Lucia. Donna's current passion is the digital transformation agenda, as well as renewable energy and corporate lending for climate sustainability, areas requiring urgent focus for countries, the Barbados Operating Company, and the wider bank. A seasoned corporate banker with 34 years' experience in the financial services industry, Donna also has a strong accounting background with a BSc in accounting from the University of the West Indies. She's a member of the Certified Professional Accountants Association of Canada and holds a master's certificate in financial leadership from York University. And finally, but not least, our third panelist is Mistress Livia Burton-Mark. Levi is a deputy director and head of the Anti-Money Laundering Supervisory Unit in the Financial Sector Supervision Department here at the ECCB. The unit is tasked with the responsibility for the implementation of the ECCB's risk-based AML, CFT, CPF supervisory framework. Levi holds over 18 years banking experience, which includes corporate and retail banking and bank supervision. Prior to joining the ECCB, Levi worked for one of the international banks in St. Lucia, where she served in various capacities, including customer service, treasury, corporate banking, and loans. With over a decade of regulatory experience, Levi's supervisory knowledge includes problem bank management, bank intervention, bank resolution, mutual evaluation assessments, and the conduct of national ML and TF risk assessments. Levi holds a master's in finance and a bachelor's in banking and finance. She is a certified internal controls risk analyst and business continuity strategist, a certified credit risk analyst from the Canadian Securities Institute, a certified money laundering specialist from the Association of Certified Anti-Money Laundering Specialists, and a trained assessor from the Caribbean Financial Action Task Force. Levi is one of the recipients of the ECCB's 2019 Impact Award and the Governor's 2018 and 2022 Star Award for Outstanding Performance. Levi is passionate about the arts and takes deep pleasure in introducing new and creative ways to facilitate learning and growth. Levi remains driven by the mantra of one of her mentors, fail fast and embrace new challenges, noting that in every situation there is
to include access to everyday transactions through safe and affordable direct banking and savings accounts from financial institutions of all types, access to credit, access to insurance to mitigate against risk, to be able to save for rainy days and big goals, and ultimately to accumulate longer-term wealth. We all want to see that as the trend that we see in the currency union. So we look at the world of digital finance and finance management with financial inclusion. Most financial, if I asked everyone in here, you would say that you want your institution to be at the front of that, and you want everybody to be financially included. And that includes making sure that there is access to things that cause financial exclusion at this point. We want that there are, well, the things that cause that exclusion are asking for minimum savings balances, having the access to banking in the first place, fees we've heard about, opening bank accounts and the challenges there, and the speed of access to cash and credit and the access to insurance. We want all of those issues that are causing these challenges to be dealt with. And as more financial inclusion or financial institutions embrace digital, the financial system has become more accessible, I would say. And the regulatory framework to support financial inclusion must be in place, and I'm sure we'll deal with that quite shortly. So just to talk about a few things, the minimum savings balances, once we have transitioned, a lot of us have transitioned to digital accounts and the ability to transfer via the ECACH. That has reduced the cost of the transactions because we've reduced the amount of human interaction. And certainly that is something that helps that barrier to come down. So we now have access to these accounts, and these can be low-cost accounts. We're now able to do banking from the internet and on mobile, and people don't even have to come to the branch if they don't want to. From a fee perspective, the reduction of cost to serve, because it has gone down, has reduced the cost on digital accounts. And because of us wanting to push people to digital and outside of the branches, there may be a cost differential in terms of using the in-branch services versus digital, but that cost differential, I think, is a positive one. With respect to opening bank accounts and the challenges there, there is a lot of misunderstanding around the true KYC needs for people opening bank accounts generally. And the big issues usually are proof of address and proof of income issues. And once these are overcome, alongside low-cost digital banking account options, this will allow for access. And certainly the ECCB has been helping with that, those misunderstandings to be dealt with and us to come up with new policies with respect to account opening. In terms of speed of access to cash, the ECACH has done a spectacular job in making these, these transactions real time. I don't think that as a banking industry we use this enough and drive our clients there enough. And access to credit, there's usually access to credit to the underbanked, but usually at very high interest, and under-regulated entities are providing credit, but they're usually, not at good rates. The credit bureau and credit scoring will provide a basis to allow for credit to the underbanked based on everyday experiences as more entities come onto that, bill payment entities come onto the credit bureau. And then access to insurance. We have increasing prices of insurance. We have to deal with this, but one of the things that has happened in more recent years is that, insurance has even been broken down into, payment periods every month rather than having to pay it all at once. That has been helpful, as well as institutions even offering no interest loans to allow for those payments. But it still remains something that not everyone can access, and it's really a challenge that we need to talk about some more. In terms of regulation, inclusion starts with direct banking, access to banking and savings accounts. As I said, not everybody has to go to a commercial bank, as long as financial institutions also have access to the ECACH. In Barbados, we have 2 of the larger credit unions already connected to the ACH, and one of the credit unions actually provided a portal to the other smaller credit unions via their own rails to be able to access their using Visa debit cards and so on. Other smaller credit unions were able to tap into the credit union system and allow for ACH transactions to happen with the credit unions. And so apart from digital transactions, people can go and do digital banking at credit unions in Barbados using the internet banking portals. They have ATMs, chip and PIN cards, and this allows for digital adoption for the members and financial inclusion for credit union members. And I think this is a very good this is something that certainly needs to expand across the currency union here. So the regulatory framework for financial inclusion has to be in place via a regulator for credit unions getting onto the ECACH, and along with the ECCB, protect all institutions as well as the clients from and the overall financial system via regulation and audits from malactors that could join the ACH. We all want to be safe there. And the challenges for account opening, we've ventilated these quite a bit, and recommendations have been made. However, there must be change that must be shepherded through each institution. And we know that digital transformation is costly, and every financial institution is different. And because of this, it requires a measured approach for each financial institution to go through a process of digital transformation, ensuring that things like cybersecurity are dealt with, which is something that we're all very, very aware of, and we know can cause serious harm. And so the regulators can provide a roadmap by institution as to what their digital transformation looks like, and how they are going to go on the journey of financial inclusion for their clients. And again, insurance, we have to do more there to support. So the last thing I want to mention is just the ability for us to dream a little bit about what is the art of the possible. So we all want to have access to low-cost direct banking and savings accounts. These are available. I know certainly in my institution, direct banking and direct savings, we've tried to go to almost free for those that are done digitally, so that it really does allow for that. The other thing that we can do and has been done is that for young people who are now entering the system, they are fee-free accounts. And for older persons that are retired, they also have fee-free accounts. And so therefore, as long as you have low-cost or no-cost direct banking for individuals, as well as you anchor both the young and the old, it means that the fee side of things has been dealt with respect to direct banking and savings accounts, which is usually a big barrier. Credit unions joining the ECACH opens a door of opportunity for many more people to access the system and have internet banking activities and so on that, like I said, doesn't have to come from a commercial bank. Then there's the ability to open an account, not coming into the branch, but from your home or your phone, provided by online through digital client onboarding. This is actually available in the ECCU right now. Recurring checks replaced with digital transfers to low-cost accounts, as we talked about, which allows then for fees to be reduced. And then there's the whole aspect of reducing checks and replacing them via prepaid cards. That means that people that don't even have bank accounts can access certainly commercial banking systems through prepaid cards, where your client, who may be the government of the country or the national insurance scheme, or you're a contractor and you have construction workers that don't have bank accounts, but you issue them with a prepaid card, they don't have to have the bank account, but they do feel very much included in the system because they can go to anybody that has an ATM, chip and PIN, and act the same way as somebody that does have a bank account. I think this is a very big step for people who feel underbanked, and this also is available. Digital identity for KYC, attached to an electoral list, a digital ID we've been talking about, where because it's a central pool, there's no need for each financial institution to go through that laborious process, but because it's attached to the electoral list, and it is a central repository which is accessible by financial institutions, that eliminates the tension and friction with respect to KYC. In Barbados, we've started this process, and whilst we haven't gotten to the portal yet, we have started digital identities, and I know it's something that's being talked about by governments in the ECCU. And then again, credit scoring that we mentioned, and also commercial loans disbursed between 3 to 10 minutes from your phone. This is also available here. And so that access for loans without having to go through a long, laborious process, but having a self-serve, that also is something that really does make people feel a whole lot better about the financial system and allows people to get closer to access to credit. And then lastly, but not least, reform, which is one goal that we all need to press towards, is reform of the educational system to introduce financial concepts at a very earliest stage so that we can get better at financial literacy. So just want to leave this with you, that the future belongs to those who believe in the beauty of their dreams, and we need to dare to dream. I thank you.
Thank you, Ms. Wellington, for sharing your perspectives from the banking sector. And we agree that financial inclusion have to go in hand with financial literacy, and we all have a part to play in educating the public. And we also note your insights on the role of the regulator. So we've heard from the credit union, we've heard from the banking sector, and they both mentioned the role of the regulator. So now on this journey, we're going to hear from the regulator her perspectives on financial inclusion. Livia?
Thank you, Shari. Pleasant good morning to our distinguished guests. To my esteemed panelists, I thank you for joining me this morning in this very critical discussion as we speak about financial inclusion. In an effort not to be repetitive, there are some critical points that were brought out by the previous panelists. Mr. Evans would have indicated the role of the supervisor in terms of application of a risk-based approach. Donna would have brought up the issue of financial literacy in our space, and what is the role of the regulator when we speak about financial inclusion and innovation, and whether or not there is a regulatory framework to support this, which is the catalyst fundamentally for financial inclusion. My presentation this morning is very brief, and as you'd recognize, I will start off with 3 core points. One, we will explore some of the regulatory challenges, and I believe some of that has already been ventilated by my fellow panelists here. There is need for improvement as it relates to accessibility by our people in the currency union, and that is through ensuring that there is acceptable means as it relates to KYC requirements. We will also look at the issue of application in the currency union. If it is that a framework exists, what then is presenting the issue to the people in the currency union? And finally, we will take a look at what is on the horizon as it relates to our roadmap towards financial inclusion as well as digital transformation. To start off, and by no means I don't think this is an education process, I'm very aware of the audience in here and your knowledge of financial inclusion. But when we look at the definition of financial inclusion, I want you to focus on 3 key elements. 1, accessibility. 2, vulnerability. And the third, that being of affordability. And it is only in achieving those core elements within our system can we truly indicate that we have achieved financial inclusion in our space. So to start off this morning, I thought it necessary to start off by demystifying what I would consider to be some of the barriers to financial inclusion in our space. And we have heard, we have listened very intently as a central bank as to the challenges that our people face in opening an account. We have also listened to the challenges that our financial institutions face when people enter the banking hall and the expectations of the regulator. And so I think there are some core elements that we need to take into consideration, particularly when we are speaking about accessibility, which is one of the core elements when we speak about financial inclusion. Implementation of the concept of proportionality is core and fundamental to financial inclusion. And you would ask why? The concept of proportionality proffers that regulation and standards need to be aligned to the systemic importance, the risk profile, and the complexity of a financial institution. And so what the ECCB has done is implemented a risk-based framework which defines the supervisory action and the intensity that we have in terms of supervision of our financial institution. So it is not a one-size-fits-all approach. Notwithstanding, we recognize that there's always areas for improvement when it comes to ensuring that standards are adequately applied. Disproportionate implementation leads to unintended consequences. Hence, we have matters such as financial exclusion. We will also talk about the application of a risk-based approach to AML-CFT compliance, and I have heard the calls from my fellow panelists here. And what we would want to highlight when we speak to the application of the AML-CFT compliance program are the international standards which exist. Firstly, all of our member countries within our jurisdictions are members of the Caribbean Financial Action Task Force. The Financial Action Task Force, which is a standard-setting body, has implemented recommendations for us to adhere to. Recommendation 1 of the Financial Action Task Force requires that countries implement risk-based programs. That is, they need to understand, assess, and implement measures to treat with risk that has been identified within the various jurisdictions. Recommendation 10 further goes on to indicate that where risk has been identified and where low risk more specifically has been identified, there can be the application of simplified due diligence. And this is critical when we speak about financial inclusion. If there is a low risk that has been identified, is it necessary for some of the mitigating controls that we are seeing being implemented within our financial space? We took it a step further and we went to review the legislation that exists within our 8-member jurisdictions. And what we have recognized, as they are members, all seeking to be compliant with the recommendations, the legislative framework supports the application of simplified due diligence. And so where a financial institution has identified low risk with a customer, they can implement measures which can allow for greater accessibility of our people in the financial space. But we are not saying this is perfect. And so we move on to our second element, which presents some challenges. Ms. Wellington would have identified certain groups in society, young people and the elderly. Ms. Evans would have also noted in his remarks in terms of the segment that they deal with the credit union. And so identification of vulnerable groups in our society is critical when we start the discussions on financial inclusion. Second element, so remember we spoke about accessibility, we are now looking at vulnerability. Who are the vulnerable persons in our society to which we can ensure that there are minimum standards for them to access the financial system, that being one, and there are products and services that are tailored to their specific needs. And so we recognize that there is need for identification of the vulnerable persons within our society. There is a third element that we speak of in terms of innovation versus regulation. Ms. Wellington went in depth regarding the need for digital financial services in our space. Ms. Evans also made mention of the inclusion, the Financial Literacy and Inclusion Survey, which was conducted by the ECCB. And one of the core elements that was brought to the fore here, if you have an opportunity to review that, is that digital financial services are not greatly utilized by people in our space. So often you find regulation lagging innovation. And if I may, Governor, quote your remarks from yesterday, there cannot be financial inclusion without digital innovation. And so we recognize why we may want to have the regulatory space to foster digital innovation. There is also need for financial literacy programs to ensure that people are utilizing that. Further, when we are looking at a regulatory space for digital information or financial information innovation in that regard, we must ensure that it is capable of ensuring there are mechanisms such as regulatory sandboxes that can be implemented. And I think the ECCB has a very good platform in that when we speak about our CBDC and the implementation of Dcash. We must also ensure that there are testing environments, such as test and learn environments, where something can be launched and there is supervision, we can learn the lessons and tailor our regulatory approach to ensure that we foster greater financial inclusion within our space. And so we recognize that there is need for improvement in that regard. It brings me to our next point, which is the issue of application. And you'd recognize in my previous slide I indicated, well, we've reviewed the legislative framework. We believe, based on our assessment, that it is adequate for persons to access financial services in our space. But there is an issue. And why is there an issue is the question that we constantly ask. And I've highlighted some points in here. One, that is in regard to the understanding and application of a risk-based approach. And I believe Mr. Evans would have indicated that in his speech. Part of which is the identification of what we call risky business. What really is high risk? And if we flip that over, what then is low risk in our space, which will allow for minimum KYC practices and procedures to be implemented? What we have recognized in the space, customers from bank to bank, each with different requirements as to what is required to open an account. And while this is often defined by the risk appetite that is implemented at the commercial bank, we recognize that there is need for consistency in what is defined as risky business or what is low risk in our space that can allow for greater financial inclusion. The second is the conduct of customer risk assessments. And what we have recognized why there is need for improvement in assessing the risk associated with our customers. We often find that the assessment comes after the requirements. And if we are to speak from the experience as a customer, you enter a financial institution, the list of requirements tend to come first before you are assessed as a customer in terms of what is the profile and what then is the due diligence that should be applied to you. The third element is the application of the simplified due diligence. And so we recognize that there has been no distinction, or perhaps little distinction, I would say, between what is enhanced due diligence, normal customer due diligence, and simplified due diligence that can make accessibility to financial services a little more amenable to the people in our currency union. Secondly, we want to note that consumer protection mechanisms are necessary to ensure that there are user-friendly mechanisms in place to allow for customer complaints and claims to be ventilated, and it allows for a system of recourse. And that is absolutely necessary when we are speaking about financial inclusion. We need to protect, remember the second element, that being vulnerable, the vulnerability of our persons. For those who do not understand certain financial products, and where we need to ensure that there is transparency in the fees and charges that are being implemented, an effective consumer protection mechanism is absolutely necessary in this space. So there's areas for improvement. The final point is improving overall financial literacy, well articulated by Ms. Wellington this morning. Again, I encourage you to take a look at the survey that was done by the ECCB. The ECCU scored 12 when we looked at the index for financial literacy, which tells us that there is a long path to go. And when you disaggregate that data and look at it on a territory level, it paints an even more sobering picture of what exists in our region. So what can we do when we look at the matters that are on the horizon from the ECCB? We need to ensure that there is a collaborative approach with key stakeholders and to drive the agenda of financial inclusion. And if you look at the agenda of this forum, there are some critical elements that fall along this agenda for collaboration. The governor yesterday spoke about the ECCB's initiatives towards modernization of our payment system, all generated towards greater financial inclusion within our space. The ECCB, as part of its strategic initiatives, also has its digital transformation initiatives, and we have partnered with key stakeholders to ensure that that agenda is driven in the most effective way that can reach people of the ECCU currency union. In addition to this, the ECCB at a very operational level has partnered with key stakeholders in our space, that being both private and public sector persons, that being other regulators, to what we consider to be a development of a roadmap towards not only financial inclusion, but to ensure that simplified due diligence can be applied in our space in a consistent and effective manner to encourage greater access for our persons in the region. The second is the development and issuance of guidance notes as it relates to the application of simplified due diligence. And this is critical. While we may have a roadmap in place to ensure consistently, and we often say to ensure effectiveness, something must be consistently applied. And as a result, the development of those guidelines will ensure that on a consistent basis and across our currency union, that persons are applying the necessary measures to ensure greater access to the people of the region. There is need for training on the conduct of risk assessment, as there's variations in the understanding of what constitutes the risk assessment and what defines a customer as being low risk who would be subject to simplified due diligence. We also note the drive towards greater public awareness aimed at improving financial literacy. The ECCB was not the first to do a survey relating financial literacy and financial inclusion. There have been many studies, one done by the World Bank, there's one done by the OECD, and the literature is very clear. There is a direct correlation between financial literacy and financial inclusion. The latter being where financial literacy is low, there is greater aspect where people will be excluded from the system. And so we come back to the issue of proportionality again. Disproportionate implementation of certain aspects because of a lack of understanding, unintended consequences such as financial exclusion. And so the ECCB has also embarked on a journey towards improving the financial literacy in our space, and most persons are able to relate to our Financial Information Month, But we take note that these need to be driven a little further and perhaps reach our younger generations of persons, where financial management and financial savviness, if you want to put it that way, is embedded in our society from a very early age. With that, I end with a quote and one for us to ponder for a minute or two. Miss Wellington would have asked us to dare to dream, and I ask the same of you. I ask for you to imagine what we think is now impossible. And if I'm to quote the words captured here, what is now proved was only once imagined. And I see and foresee that we will hit our goal as it relates to full financial inclusion for the people of the region. I thank you for your attention this morning.
Thank you, Livia, for sharing your viewpoint as a regulator. We note that you had a call for collaborative approach to drive financial inclusion, and that it can only be achieved if we achieve accessibility, vulnerability, and affordability. So we thank you for that. So now that we've heard from the credit union, the banks, and the regulator, we will now entertain questions or comments from the audience. So if anyone in the audience have a question or comment, just raise your hand, and once acknowledged, you introduce yourself by stating your name and the institution, and then you make your contribution.
So Shema John, Country Manager, Dominica, ECCB. Question to FCIB, Wellington. Why is it not possible for citizens of the ECCU to open a bank account at FCIB, even if there's not an FCIB in their country? That's to you. And to the credit union, at what age do you all allow for children to have a card, a debit card? Because that is one of the ways we can teach our children to manage their finances. So in Dominica, the National Bank and the credit union, they will not allow it until 18. And I think that is a little too late. So we might want to relook that and probably as early as 16 allow for children to manage a debit card. And that will also help them later on.
Okay, before they answer, anyone has another question? We could take maybe one more question and then we'll allow them to answer. Any more questions? Okay, go ahead.
Good morning, Ms. Sonia Fairfield Hayes, First Federal Credit Union. Very good presentation from our colleagues here. I just have one question and maybe a concern. While we accept what we heard from the risk department here, what we want to know is there any collaboration, as you're just not the only regulator for the region, is there any collaboration with any of the other regulators to make sure that we are speaking the same language where it relates to how we assess risk and defining the simplified approach?
Okay, thank you for your question. So, Ms. Wellington, you can go ahead.
And thank you for your question, Ms. John. I can say very simply, in those islands that we exited, banks never leave. Banks change brands, but they never leave. And so therefore, where we left, the bank that was remaining, there are rules of engagement that we have for those countries that we left. So it's not that we just, it can just happen like that. We have rules of engagement in all the countries that we exited with the persons that we left our clients with. Yeah, they're all here, and they would nod at that. We're just not supposed to be still in the markets if we've left the market, if we want to put it that way.
Okay. Mr. Evans, in response to Sean's question.
Yeah, thank you for that. The issue with the junior or children accounts is that these accounts are held in trust of the parents until the minor is considered an adult. So the parent would be able to have a card for their account and have access to the child's account. So it's held in trust until the minor becomes an adult, where we need to basically have the same due diligence as everybody else. So they would need to have 2 pieces of ID as we are regulated to do, and show that they can manage their account on their own. So that is the challenge there. It is not that we do not wish for them to have a card, but the regulation around having an individual separate account, because once you have the card now, you are essentially have an account on your own.
But that is why it is not standard across the board, because at FCIB and at Republic, children are allowed to have a card. But then at the National Bank and at our credit union, they are not allowed. So that's why we need some policies across the board.
Agreed.
But if we really want our children to be more financially literate, we have to start them off earlier in terms of managing their account.
Okay, thank you. Levi, would you like to respond to the collaboration?
Yes, thank you. So thank you for your question. Regarding collaboration, I can confirm that there is collaboration with the other regulators across the ECCU. We would have had a meeting, I believe, in September with our Regulatory Oversight Committee. We have a working group where there's representation from some of our various regulators and from the private sector, being our licensed financial institutions, who are drafting the roadmap towards greater financial inclusion and the application of simplified due diligence. So there is collaboration input from the other regulators. Thanks.
Okay, thank you. Because we're running out of time, we're going to take 2 more questions from the audience, and then we'll wrap up. Go ahead.
Yeah, Joanna Charles, ACB Caribbean. What I want to know, does that include a request to change the age of majority? Because I think that's the problem here. Some of the islands have age of majority at 18, and that's a legal thing. So in terms of the Regulatory Oversight Commission, is that one of the things? Because most of the kids leave secondary school at 16 or 17, and they're employed at that age. So are we saying that they should not have a card? So does that include, making representation on changing that part of the regulation that makes it easier for everybody to be included?
Yes, of course. There is definite demand for persons having access to a debit or ATM cards at a much earlier age. So that is definitely something that we are pursuing, that we are looking into, and that we have had the requests for a number of years. So once we work with the regulators to have that standardized, that's definitely something that is in the works.
Okay, thank you. So, one more question.
Yes.
Well,
Hello.
yes, go ahead.
Yes. Solian Russell, Bank of St. Vincent. Just to say, relating to the issue of issuing a child a debit card, then one has to look at the risk appetite of the institution, bearing in mind that, especially if it's a Visa or MasterCard branded, the issue of fraud and identity theft. Giving a child a card and that child being irresponsible as a child and allow them their identity to be exposed, and the issue of theft are things that we need to bear in mind when we're talking about issuing a child, especially Visa MasterCard branded. Even though you have mechanisms in place, the hackers are always on the run.
I can even answer, I can respond. That's where the financial literacy comes in. That's how we're going to train our children. And we're certainly not going to give them a Visa or MasterCard with $1,000. We're just in the training process. So if we put $300 on the card, we tell them that is for the month, and they have to use it accordingly. So that will help with the training.
Okay, thank you. So 1, 2, 3, and I'm sorry, but that would have to be all for today.
Good morning, Sonia Roberts Carter, Eastern Caribbean Amalgamated Bank.
Can't hear you. It's on. But it's a little closer.
You hearing me now?
Closer. Closer.
You hear me now?
Yes.
Sorry. Good morning, Sonia Roberts Carter, Eastern Caribbean Amalgamated Bank. On the question of the debit card, I think why a lot of institutions don't do it is tied to the fact that a minor cannot sign an agreement, enter into a contract, and be held accountable for anything that may happen under that term. So issuing the minor the debit card before the age of 18, which is the age that the child can be bound by a contract, is where that limitation came about or comes up, really. So I'm hearing some banks do work around it. That would be interesting to understand, because if there's misuse now of that card, can you really hold a minor accountable for that? Where does the liability sit in that scenario? So that, I think, is what weighs into it.
Okay, thank you. You can go ahead now.
Karen Richardson, Caribbean Union Bank. I just actually wanted to echo the sentiments from the Dare to Dream. And from my perspective, you know, there's short-term wins and there's long-term wins. And I want to focus on the education, because key to financial literacy, it's not just doing a blitz once a month, it's not just having a public awareness program, but what you mentioned is very key, that our curriculum needs to change. And that's where it starts, because if that child from the age of 5, 6, 7 knows about financial planning, knows about financial literacy, then the other things can change in terms of having a debit card or not. To me, that is important, but the critical thing is resetting that mindset, going back to what our parents used to do, our grandparents used to do, and what can we do leaving this conference? Because, you know, we can talk about it. How can we be advocates of ensuring that these things go into our curriculum, ensuring that there is financial literacy built into our educational system? So I think that's my, my concern. How can we take this forward and prepare for the future?
Thank you. Go ahead, sir.
Good morning, Carol Mangal, Sagicor Finance. My question more has to do with collaboration. So over the years as banks, we have seen where customers who are at credit unions and they approach banks for financing, the collateral that they provide is usually below the loan amount. Another thing that we've also seen recently, the ECCB would have gone on a drive where valuers have to be RIC certified. And we saw a number of valuers saying to take them off our list because they were not willing to be RIC certified and they were getting enough work from the credit unions. How can we collaborate to ensure that we are following the same guidelines? I'm not sure who will answer this question, but maybe Levi and Mr. Aaron, Mr. Evans.
Okay, thank you. One last question. Go ahead.
Thank you. Jessel Gadsby, Caribbean Credit Card Corporation. My thanks to the presenters and to you, Madam Moderator, for an excellent session. I want to just make sure that we were drawing a distinction between the payment instrument and the holder of the account. So for example, I can be the person who's liable to you for the use of the account, but I can give a child that instrument to use. And it need not be a card, it can be a mobile app, it can be a token, and the person is able to use it, and you can administer that as you see fit. So children should be and are allowed within the networks, Visa, MasterCard, and the like, to present these payment instruments. The separate issue is how you manage the account at the financial institution. That was the one point I wanted to make. Thanks.
Okay, thank you. Levi, would you like to respond to the question on collaboration?
So Ms. Mangal, just to take note, and perhaps I will respond to that at a very high level. So the matter regarding the valuers and the RIC certification is one which has been targeted at our licensed financial institutions. one would appreciate that the ECCB has issued what we call our credit standards, and there are varying guidelines or standards that guide the operations of our institution. The ECCB, in terms of its supervisory authority, extends to those licensed financial institutions. And so the credit unions who cater to a different segment may have different requirements under their supervisory body. I think there is one, what you're seeking is in terms of consistency, that persons are held to a similar standard to ensure that there is resilience in our financial space. But while I believe those discussions are necessary, I also want you to take into consideration, which I would have offered earlier, the concept of proportionality. The credit unions cater to a different segment of persons. And so when we're looking at the implementation of international standards, you have to take into consideration significance, systemic importance, risk profile, size, and complexity. When you take a look at them, some of them are very different from how banks operate. And so there is a deeper discussion that needs to be had at that point with regards to the standards that one is implementing to the credit unions and the banks. They're very different in terms of functionality. And identification of those that are considered to be systemically important, that perhaps need to be applying greater international standards, are discussions that are that are currently being ventilated at the ECCB and regulatory level. But it is something that is under consideration, and I believe perhaps further the governor could comment on that as well, but we take note of the comment in that regard.
Thank you. So unfortunately, at this moment, we'll have to pause our journey, but rest assured, discussions will continue beyond this forum on this insightful topic. But before we officially pause this journey, I now invite the panelists, 30 seconds, to just give some final remarks. So starting with Ms. Wellington, go ahead.
Thank you. Just to say that we continue to dream. I heard the question regarding what can we do? You know, how do we take this forward? Our job in each of our countries and whatever area we get into is advocacy at the end of the day. We have to be at the forefront of that, trying to make sure that the policymakers at the government level and so on hear us with respect to adding that to our curriculums. I know that this has been happening in Barbados for quite some time now. Financial literacy bureaus also popping up in countries to help to support, as well as ministers of education, educational reform, all of that is required. But we also have a job to do with respect to all of our institutions, with continuously helping the public to understand with little bite-sized amounts of information that they can absorb to help to move us to that level to be able to get things moving.
Thank you. Livia?
So thank you, Shari. Thank you for your attention this morning. I believe in closing, there is a framework, or at least we have the tools to empower us and to drive the agenda as it relates to financial inclusion. And of course, financial literacy being part of that agenda. Collaboration with the various regulatory bodies and key stakeholders, such as our financial institutions, is critical in that discussion in that regard. So there's a greater appreciation in terms of what are the regulatory expectations, but what also is happening on the ground at our financial institutions and how regulation ideally impacts our customers. And so I think that Dare to Dream, and Donna might copyright me at the end of this, is critical to the position, and I think that dream indeed can become a reality in the future. Financial inclusion is a priority item for the ECCB. We are alongside our financial institutions when it comes to this and the people of the region, but we must ensure that this is done in a prudent manner, which is fitting with international best practices, but is also amenable and allows for greater accessibility for the people of the region. Thank you.
Mr. Evans?
All right, thank you. Just to reiterate what my colleagues said, financial inclusion is a major issue within the region, and we need persons to be part of the financial system for their own personal finance growth and stability. When we look at the regulation and what we have here locally in the region. We just don't want to inherit what is applicable in the larger countries. We want it to be tailored to our personal situation. And from the credit union point of view, there are persons who genuinely need someone to sit down with them and explain certain things. We are all here in this room. We know finance, we know the banking, we know the regulations, but how is this applicable to them? How is this applicable to your neighbors, to your friends, to the kids? So that is the bridge that we are trying to close, the gap that we are trying to close. So I just want to leave you with the point that when you leave here, don't only speak to your colleagues in finance, in banking at Central Bank, but persons in other industries who don't have the privilege to be here and understand these things. So I would leave it there now, Shari. Thank you all again.
So special thanks to our panelists for your insights and perspectives on financial inclusion and regulation in the ECCU. I hope that this discussion has been informative and helpful, and I would like to close by reminding all of us that financial inclusion is essential for building a more prosperous and equitable world. It is our responsibility to work together to ensure that everyone has access to the financial services they need to succeed. So thank you for your time and attention today.
Please join me in giving our panelists and moderator a round of applause. And we do extend an immense thank you to our esteemed moderator and panelists for their invaluable contributions and insightful discussions, and to you, our audience, for your engagements. Thank you. We will now have a networking break for approximately 25 minutes. I encourage you to return to this room promptly at 12:05 p.m. Thank you.